Good morning, traders. It is Wednesday, December 27th. This is my last video of 2023. It's been an incredible year for us. I start each one of these videos off with a review of my previous pick. That's how you can tell that the systematic trading approach really works. PATH was the last stock that I highlighted. I still like it. You can see this big gap up right here, preserved higher lows above the AVWAP-E. Stock is continuing to grind higher. I think it's going to have a big move higher one of these days. Could come tomorrow, could come in a week, but everything is setting up for the stock to continue to move higher. CVS, that was a stock that I highlighted last week during our video, the live event that we did on Wednesday. I still like CVS. Look at how the stock has powered higher. Really nice pick. Has this big move higher to horizontal resistance, compresses, and then stages the next leg higher. If we zoom out, we can see that the stock is through this horizontal resistance. Love that. It's above all the major moving averages. Love that. And it has plenty of upside to get back into this $100 level. I like that. I think this is the kind of stock that asset managers are going to want to have in their portfolio heading into 2024. They're also looking to rotate into some of the laggards because they've missed a lot of this last move higher in the market. We'll get into that in just a second. Now, during the last live event that we had, which by the way, I'm sorry that I'm not doing a live event today. We have some technical issues that we need to work through, but we plan on doing these live events every Wednesday, about 2.5 hours after the open so that we can actually look at real markets. So we'll get it figured out for 2024. We like doing the live events. We've got a lot of positive feedback from all of you. So today I'm just going to do a simple recording. And I don't plan on doing one on New Year's Day either, so this will be the last video for the year. When we did our last live event Wednesday, it came on this long red candle. However, it didn't look like that while we were doing the live event. In fact, with about 2 hours left to go in the trading day, we had just started to notice that VXX and VIX were starting to pop. And that was a little bit suspicious to us. So let's go into the 5-minute chart and take a look at what happened on that particular day. And there you can see, this is the price action during the entire video. And then all of a sudden in here, we started to notice that VXX was taking off, and that was a little strange because if you've got a market rally like this, typically the VXX and VIX are going to be heading lower. So let's put VXX up, and we'll go back to that time frame, and you'll be able to see how it had started to creep higher in here, and that was really strange because it should have been doing a nosedive with that type of price action. Well, this was a precursor of what was to come. And 0 DTE, there were huge options being purchased, some out-of-the-money puts that expired that day, and that was enough to get the market to crack down. There was a lot of bullish speculation, so that's another factor that played into the market starting to sell off. So I'm going to remove VXX, and we're just going to take a look at the SPY without that overlay. Although I should say, let me do one thing. Let's put VXX back up there because you'll see that option implied volatilities have continued to decline very steadily. There was your little pop, and now they're coming right back in. The reason for that is that the bid to the market is very, very strong. Institutions are out there buying. So during the last 2 months, and you know this because I've highlighted this in all my videos, what do we get? We get one little red bar and then buy. One red bar, buy, buy, buy. One red bar, buy, buy, buy. This came at a time when we had had lots of bullish speculation, lots of bullish traders out over their skis, had way too much of a position on, and they freaked out when they saw that long red candle. But there was no news to justify that market decline. Did the Fed all of a sudden decide that they aren't going to pause? That they're going to hike rates? No. Well, did inflation spike in the last 2 hours of the day? No. Was there a credit crisis? No. So where did that come from? It was simply program driven, very light volume, heading into year end. They felt that they could shake out some bullish speculators and maybe get something going. And the very next day, boom. Bullish hammer, close above AVWAP-Q, grind higher, grind higher. Yesterday, the market made a new all-time, they didn't make a new all-time high on the SPY. SPY got through the previous high of the year, and we are within striking distance of the all-time high. We're only about 40 S&P points away. So if we get 15 points out of the next 3 days to close out the year, we're at an all-time high. Think of the headlines that would generate. Market closes 2023 at an all-time high. That's going to get investors pretty excited. It's going to get asset managers excited because they get paid on assets under management. When those are valued very highly, they make more money. There's disincentive right now for asset managers to sell. They are trying to buy. They were not able to participate during these gaps right in here, and that's why they're having to bid more aggressively, and that is what's fueling the market rally. Yes, into year end, you do see the volume dry up a little bit, but that means that even a small bid can drive the market higher, and that's exactly what's happening. That's what I expect to see happen in the last 3 days. So let's talk a little bit about 2024. I know a lot of people like to give their year-end forecasts for the next year, and as far as the brokerage firms are concerned, they're worthless. I mean, they are revising those estimates constantly, and if you look at where they were all lined up at the end of 2022 and look at their projections for 2023, they were way off the mark. I don't even look out a year. I look out about a month is my window of clarity, and that's kind of where I keep my trading. Right now, I do feel that the market's going to continue to move higher for maybe 2 or 3 months. It really depends on how far it moves and how quickly it moves. If we move really, really quickly and we get some type of buying climax, then we could see a bit of a pullback, a retracement. But if we continue to just grind higher, then I think the market's got a lot more upside. You hear a lot of people saying, I think the market's going to sell off in January. This is all fluff, and all these people are going to get washed out. And then you have a dozen different reasons of why the market's going to roll over. I don't even pay attention to it. I don't care. All I need to do is to take a look at price action. Okay? When you get choppy price action like this on the way down, this is from August to October, you get this sell-off. Okay, institutions are in there selling. You got seasonal weakness. The Fed's still in hiking mode. You got the FOMC coming up. You got the debt ceiling, blah, 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 blah. Okay, so they sell it off, and then they're able to bounce it, and then they sell it off, and they bounce it, and they sell it off, and you get this little choppy stair-step type of market decline. Well, a lot of this on light volume is all program driven. How is this different than that? Here, they can't get enough. You've got these big gaps up, and the gaps up never retrace, not even a little bit. So there's no volume here, there's no volume here, there's no volume here, there's no volume on a gap up. Once you have that opening price, of course, then you start getting volume, but there's no participation in here. So for all the people waiting to buy a dip, the dip never came. So they had to keep raising their bid. Why? Because they got money to allocate. These guys have to buy because the market is going higher. The programs are prevalent when you have equilibrium and two-sided price action. Well, right now, the guys that are running the buy and sell programs, they also are executing brokers for large funds, large mutual funds. When they can see those inflows and they can see those fund managers bidding, They know that they're not going to be hitting the sell programs in here to test the bid. They know the bid is strong because they are out there buying these stocks for these funds. And so you get this continual drift higher without any dips like this. And that is another sign that the bid is strong. So we've run really far, and people cannot buy when they see a move like this. I'm not going to touch that thing. It's too expensive. Well, that mentality has been ingrained in us because we don't want to chase. And that is a good thing. It's good to be prudent most of the time, but you also have to recognize when you've got a backdrop that tells you that this move is legitimate and that we are going higher. So what typically happens when you've got a powerful, powerful, powerful move like this is at some point you're going to get a little dip, okay? And this is even bigger than what I would expect. Let's say it pull back like this, it lasts maybe a week or so, get down to the AVWAP-Q, and then whoosh, there's your next leg higher. Visualize this. What is that pattern? Well, that's a bullish flag. So imagine that this is at the tail end here, and you get a little bit of a pullback like this that lasts a week, and then zoom higher. That is a bullish flag. Typically, you're going to get one bullish flag and a big leg higher. And you get another bullish flag that lasts a little bit longer and retraces a little bit more, and then another leg higher. And then by the third bullish flag formation, you start to see some of the momentum wane, and you get into more of a trading range. A lot of the move has been exhausted. Folks, we're not anywhere close to that happening yet. And I'm not looking at headlines. I'm just looking at price action. So until I see the first one of these bullish flags and a release higher, I'm not even going to get remotely worried about my swing positions that I've got on for 2, 3, 4 month period of time. This market looks to me like it's going to continue to grind higher. And yes, you can find a litany of reasons to be bearish. They're always out there, and the market always climbs a wall of worry. This time's no different. But what is different is this price action. We know that longer term money is coming to market. That does not mean that we go gonzo right now and we load everything up. No, you don't need to be that bullish. You need to have nice longer term swing positions on. You need to be in control. That's the important thing. And when you get a big down day like this and you get sick because you start thinking about, here I was thinking about all the money I'm going to make. Oh yeah, I'm going to make a killing. This is going to be a great year. Here, after a day like that, your stomach is around your ankles and you're thinking about how much money you're going to lose if this market rolls over. Well, when you get one of these, that is a shot across the bow. That is a warning to tell you to take risk off because you have no staying power and you are way out over your skis. And so you get this crawl back, bullish hammer. Now we're right back at that prior high. This is when you should be lightening up. If you were nervous here, this is when you should be taking notice and reducing that risk and getting yourself back in control. Am I telling you this because I'm bearish? No, I'm telling you this because you're an idiot if you are that overextended. You have no staying power. Scared money never wins. Get yourself realigned. Get your nice bullish positions on. If you've got stocks that have gone absolutely bonkers, parabolic, take some gains on those and look to get back into stocks that are grinding higher, that have not gone parabolic and that are just starting to break out. So those are some of the stocks that I'm going to take a look at today. I'm running a little bit short on time, so I'm going to kind of clip through some of the picks that I like, but I am bullish. I do like getting long here. And a day like this is a gift in many respects. So let me talk a little bit about what happens is you've got FOMO Joe who just has to get on board. Oh, this is great. The market's made a new high for the year. It's breaking out. It's breaking out. So they load up on weekly call debit spreads that expire in a few days. Maybe they go out a week and a half or so, but they're completely exposed to time decay. And they need the moves to happen right flippin' now. Not tomorrow, not in a week, right now. You need that continuation. Well, it's just a stupid position to put yourself in unless you have a compression like this and a breakout. This is where you want to try those trades, okay? You get a compression right in here, a gap higher. This is where you can try that kind of trade, okay? Not when you've got the market up here pushing, pushing, pushing higher and starting to hit resistance. This is where you want to stick with your longer term swing positions. Give yourself lots of time. Don't paint yourself into the corner. We're going into the end of the year, for crying out loud. The volume's going to dry up. The price action is going to get a little bit more choppy. Yes, we're going to drift higher, but you should not expect explosive momentum higher. And even if the market continues to drift higher, if your stock has made a huge, huge move, why is it going to continue to move higher? Who's out there that aggressively bidding for it unless there's some kind of massive material change in the underlying company? Well, you're not typically going to see an announcement of that magnitude in the last week of the year. So this is just common sense. This is not even, I got to read more trading books. This is just common trading sense, okay? So I'm trying to appeal to that. As we go through the chart, I'm just going to go through green royal flush, okay? One of my favorite swing trading searches. You've seen a lot of stocks come off of this in the last 2 months or so, AVGO. Okay, yeah, it's made a nice run. It's starting to compress. We got our green dots, 1-0 squeeze indicator, EMA 8 starting to catch up. It's too far out of the gate. I don't want to chase that. And I'm just going to flip through a bunch of these very quickly. Caterpillar, going to benefit from lower interest rates in the future, going to be good for the housing market. I like Caterpillar. I like the prospects for construction. Got some nice breakouts here, but it's not a stock I want to chase. That EMA, want to see the stock come back, test that breakout. Then I've got an opportunity if it can hold up well, and I still will be able to evaluate what the market's doing in that meantime. Yeah, so compress, compress, compress. All right, now it's proven to me that it's been able to hold these gains, that buyers are starting to line up. They're getting a little bit more aggressive. Now it's ready to make its next leg higher. That is when I want to get into that stock. I don't need to get into it right now. AMD, love this breakout. Really big, powerful move here. Compression. Nice volume yesterday. Looked pretty good. So we had this gap up yesterday, decent volume into the close. I like AMD. Probably would be day trading it more than I would be swing trading it right now because the stock is a little overextended. So on a swing basis, I'd like to see it still compress a little bit. ENPH is getting some traction because the SEC is likely to approve an ETF for crypto. And I believe that's why the stock is running higher. You can see this breakout here. It's got the 200-day moving average just above. So it's got a little too much overhead resistance for me right now to like it. Letter U, nice breakout through these major moving averages. Little bullish flag in here. Nice little move higher there. So it doesn't look too bad. Let's zoom out and see what the stock's got going on a longer term basis. We've got a little bit of resistance here. Overall, not bad. As I flip through all these charts, okay, there are some excellent prospects. Snow is just a choppy, choppy stock. Okay, it hasn't gone anywhere fast. It's got plenty of upside potential to 400, so we like that. It's been making a series of higher lows. I like that, but it's all over the board. Well, the option implied volatilities are going to be pretty good on a stock like that. And even though VXX and VIX have been heading lower on a stock like this that's that choppy, there are going to be some opportunities on a stock like this. It's above the AVWAP E, and you can see this horizontal support level is held nicely. And what did it do on this nasty, horrible, ugly day lower? This is your opportunity to evaluate. So most bullish speculators are going to view a day like this as, oh my God, what a horrible day. Well, if you're in control of your positions, you're actually looking to add when you get one of these and confirmation that this was just a one-off day. You get that bullish hammer. Okay, I'm in there adding, and I'm adding stocks that I've been watching that are moving higher. So Snow has one nasty little day, nothing too awful. So I like that. And I like leaning on this AVWAP-E. The stock has high option implied volatilities. If I can go down to this $85 strike price and get something decent, that's what I'm going to be looking for. And I'll only have to have the trade on for about 3 weeks if I go out to the January 19th expiration. So I'm going to go down to the 185, 182.50, 24 cents bid offered at 66 cents. I need to get 50 cents for this spread. If I can do that, I'll make a 25% return on my capital in the course of 3 weeks. And this is below the 2 standard deviation band. So, okay, I've got probability and odds working in my favor in addition to horizontal support, in addition to a strong move higher in the stock, in addition to a favorable market backdrop. Tick, tick, tick. I want to take advantage of accelerated time premium decay. Well, Pete, that spread's only 24 cents bid. How are you going to get 50 cents? What kind of magic powers do you have that I don't know about? Well, the stock's going to have to pull back. But guess what? Love this move higher yesterday too on volume. So somebody's out there buying Snow. So I like that too. So how do I know I'm going to get a 50-cent credit for this? I don't know. I know what I want to get for the spread. I put the order out there. If I get filled, I get filled. If I don't, I don't. But I do know, looking at the chart, that the stock does this. Chops all over the damn place. So why wouldn't it do that today? Put your 50-cent limit out there. See if you get filled. So on a nasty, horrible day like this, big red candle, what held up pretty well? Continue to go through my list. As I do that, I'm going to run across JPM. Huh. Barely even pulled back. Couldn't even finish below the prior day's low. Didn't even finish below the prior day's open. Huh. Nice. Letter C, Citigroup. Huh. Look at that. Preserved half of that long green candle. Stock continuing to move higher. BAC. Preserving that long green candle. The halfway point right in here. After a gap up. Huh. Yes, I like financials. Financials are going to perform very well. So be long financials. That sector is going to continue to perform well. And the tell was that horrible, nasty, ugly, oh my God, I hate these days. Last Wednesday, that day provided you with clarity. And the clarity was financials are really strong. There are buyers out there so that even when the market has a meltdown, they're in there buying these financial stocks. So yes, I like the financials. Snow is going to be your pick. I like that bullish put spread, selling the January 19th expiration, selling the 185, 182.50 bullish put spread for 50 cents. Hopefully you can get it off. Apart from that, Snow, see if there's any kind of continuation to that volume that we saw yesterday. Ideally, the buyers that were interested yesterday are still out there today. Get a little bit of a pullback, get your spread off, and then see some more of this buying. If I don't get the spread off, but I do see buying like that, then I'll probably day trade SNOW. So stocks that have gone parabolic, take some gains on them, look to rotate into stocks that are lagging a little bit, that are compressing, that are just starting to break out and stage another leg higher. This is the last video that I'm going to be doing for 2023. I don't plan on doing one New Year's Day. So first of all, let me wish you a happy new year. I am so excited. 2022, we had a bear market. Very, very tough for a lot of traders, but the lessons that you've learned during 2022 are going to last you a lifetime. 2023, we had a transitioning market. We transitioned from a bear market back into a bullish market with a potential all-time high this week. Also difficult because it was transitioning. You did not have clear direction all year. So another really good learning experience for all of you. We have so many members in the chat room who are making it. I mean, they are turning a corner. I'm so excited for all of you, and I can see it in the picks that you're making every day. It's not me in there making fantastic picks. It's you who are in there making fantastic picks because you've put the work in, you've put the effort in, you've gone through a couple of years of very difficult markets, you've learned the system, you're getting disciplined, and now you're reaping the rewards. So congratulations to all of you. We are going to kill it in 2024. I'm looking forward to it. Have a great, safe holiday, and we will see you next week.
Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.